Hello and welcome to the weekly chart review. It is Saturday, June 11th. Let's just dive right in. You can see my NASDAQ, whatever you want to call it, right in front of you. It looks incredibly messy. Let's not focus on that whole thing completely right now. Let's just zoom into what we've had going on in the last several days. Okay, so I'll just switch over to the 4-hour time frame. And I'll zoom in on this one. It's taken a little bit because there's a lot of information on this particular chart. Okay. So what I was expecting over the last few weeks to happen is where I have this arrow drawn. I was expecting a move up to about this box here. Around 13,800-ish. A little bit of an issue when the CPI report came out. So realistically, it was good. But the trouble was that, very similar to what we had, where was that report here? Okay, very similar to what we had on May 4th when we had, was it May 4th? Just want to double check actually. I believe it was, because it was the day where, we had a very strong spike to the upward, very strong spike upwards. So I do believe it was on May 4th where the NASDAQ climbed like over 400 points. Let me just double check. Yeah, it was here. So, that was where interest rates was when it came out. And the dollar that day became very weak and stocks kind of blasted up. Okay? The issue was the very next day, the stock market tanked. Like over the week that after that was announced, it dropped hard. It dropped almost 2,000 points within 5 days. Okay. Now on the reverse, we had a good report, but then we had a hard drop on Friday. Okay. So I do believe that there's still a very good possibility that we're going to be seeing something like this. Go up, possibly making that 1,900 or 2,000 points upwards before getting that harder drop. Because right now, where we're currently sitting, when we take a look at the daily time frame, and I'll show you in a second, right? But on the 4-hour time frame, this is my only concern, is when I draw the fib from the high point right here to the low point where my arrow is, we've already hit retracement zone. Okay? We've hit the retracement area and for it to drop lower. So that's where my concern is on the short term. Okay, on the long term, if we take a look here, okay, the last time that it kind of peaked upwards would be this area. So if we take fib retracement from there to the lowest point where the arrow is, same story. Because that's the exact same spot, right? But if we're going from the previous high, right, because this was the last actual retracement area, right, we're not even close to getting to that zone, right? That's where you see that box on the 618 here, okay? Because right now what we're seeing is it was like a slight pullback before the continuation. Now, I don't believe that it's going to be dropping that much harder so soon, because the market really needs to price in the next few months of inflation coming in, right? And if it just starts tanking and it drops to 9,000 points within the next few weeks, I mean, there's really nowhere it has left to go. Like, there's going to be so many companies that become nearly worthless in the next few months, and ones that are worth billions upon billions of dollars, right? So I want to be optimistic. I really don't see that happening in this short of a time frame. But if we jump into the actual stocks, right, I'll just show you on the NAS right here, this chart that I've drawn up. It's a little bit tidier, right? So this is what I've seen as far as Elliott waves are concerned, right? So you see the point of origin, 1, 2, 3, 4, 5. Okay, now target area for continuation, that's just my projection. Okay, so if I spread it out like that, that's what it looks like. And yeah, so the reason why it's my targeted area again is because that's the 618 retracement as far as Elliott waves are concerned, right? Because if we drop lower here, that kind of erases this 3 and we got to move it to another spot. Okay, But based on how this has been playing out, like I said, when you see from 2, you always draw from 2 to 3, where we see the retracement value. It's where the 4 is projected, and then 5 is based on the this tool, which is the trend-based fib extension, and that's where I believe we're going to be ending up, maybe around November or December, after all the interest rates have kind of worked themselves into the market, and then reversal will be around that area. Okay. So that's what I can currently see. Friday, I think, was just a little bit of a fluke, but we know how these flukes kind of turn out. They could really get much worse, right? Thursday and Friday were very bad days for the stock market. Like in total, it was a drop I didn't expect. In 2 days, we lost the gains that we've seen over the last few weeks, right? In 2 days, it was almost an 800-point drop, so pretty rough. But yeah, as it goes right now, that's kind of what I project. I still believe that we're going to be going up maybe over the next month to get to target area zone 4 here before dropping hard. As far as US 30 is concerned, same sort of situation, right? But what you see here, I just drew a little bit of a channel. I'm expecting kind of a move up maybe to this yellow or maybe even the purple line before going any lower. But as you see how it's been playing out since December, right? It's been hanging around that channel, and it's been testing this line several times. And every single time it tests one of those Fibonacci channel lines, it rejects, breaks through it, rejects, breaks, hovers in between it, and then goes down to the next level, right? So this is kind of what we're seeing right now. It kind of touched it, rejected, broke through it, rejected. We could see another breakthrough, and then maybe a hard rejection going up to that purple, right? But not breaking through it, and then further down, right? Similar to how we saw this pattern play out. So now if we go into the stocks, like overall, you guys know what my picks on the stocks is. I've done this multiple times already. Nothing's really changed for me. The only thing is, we're in a bear market. There's no getting around that. And just be very careful if you want to go long term on something. We definitely have not seen the bottom. This is a market for put options. Really, there's not much positivity right now in the market, except if a company does something like really unique and crazy. Okay, but the important thing is right now, if you see, let's switch on the NAS for a second, right? So the lows on May 20th, where it came down, let's see, because if we take a look at the 1 hour, I believe that low actually happened outside of trading time. Oh, no, it happened noon, 11. Okay, so and what day is that again? May 20th. Okay, good. So on May 20th, if any stock is lower than what it's still currently at right now, that's fine. But what we're looking to avoid is the stocks that are currently lower than what they were on May 20th, because that's a bit of a red flag, right? So you will see the spike down here. So Apple's still doing okay, following the pattern. AMC is doing okay, even though it's a meme stock, right? It's still slightly going up. AMD doing well, going up, right? May 20th was right here, and it's not breaking those lows by any means, so good sign. AMGN, MGen, this is lower than what it was, so probably not a good idea. Amazon, May 20th, somewhere around here, but it's doing good. Activision, nope, it's lower than what it was, so be careful. BlackRock, definitely higher than what it was, so good sign. Berkshire Hathaway, oh, excuse me, kind of disappointing actually that it dropped as much as it has, but it's kind of part and parcel with the actual index, right? Down 19.5%. Which, again, it's very interesting because of all of Warren Buffett's picks are actually up. So the fact that Berkshire is down, it's a bit of a head scratcher. Caterpillar, it's higher than what it was. It's good. Carnival Cruise Lines is lower than what it was, so that's not good. Costco, definitely higher, looking great. Hopefully it pulls up to making new highs, because Costco almost seems to be recession-proof at this point. Like, it does very well for itself. But again, we've seen in 29, almost 30 days for it to drop 33%, right? So that's a big deal. Even though, yeah, let's say bad earnings. I mean, come on, what is this? It's exactly what it came in at. You saying that's a negative earning? Shame on you. Anyway, Chevron, as oil goes up, Chevron goes up. Right? Nothing wrong with that. Disney, I'm still expecting a recovery here, but I mean, what to say, they're really killing themselves. DocuSign earnings came out, it just got crushed. Right, not a fantastic report right there. Yeah, I mean, as far as annual earnings, that went up, but it dropped 16% overall from their estimate and from the actual report. Yeah, so DocuSign got clobbered on Friday. Not great. But hey, I mean, it was interesting because, as you see, May 12th, so let's pop it on May 12th here on the NASDAQ for a second. Where was May 12th? Right here. So it was almost as low as May 20th. Okay, and this is, yeah, so May 12th was lower here than May 20th, so that's a good sign. It actually just dropped to those levels, so really not the worst thing in the world. It's still hovering around that Fibonacci line. So, you know, the fact that it dropped so hard could be a very good opportunity to snag, snag the stock at a discounted rate. Because as we've seen before, these giant gaps, although it may take a while, they do get filled. Dow got hit hard, but oh yeah, not even close. This got rocked. Electronic Arts doing very well. eBay doing better than what it was. Still fine. EGLX doing better than that, so okay, it's fine. Facebook, nope, Facebook getting clobbered. Frontier Lithium, wow. So you see, it's a good thing you don't buy at the peaks, because as you saw what happened, went from 386 and damn, I mean, it hit 232, right? Almost off that white EMA line. So not too bad, actually, because the last time we see it hit these lines, it kind of bounces right back up, right? So considering where it's at right now, very optimistic that it could still go up, but they haven't actually sold any product yet. So this is all kind of based in on what they can potentially give to the market, right? So if you're nervous about grabbing a company that's still on either research or this is a mining company, so they still need to mine the product, right? But look into them. I mean, you might be pleasantly surprised. GameStop went up compared to everything else. That's wonderful. Okay. Google, higher than it was, so that's good. And we're seeing, excuse me, got to get those yawns out. We're going to see a stock split on July 18th, 20-1. You know, this is going to be another Amazon. Very good potential buy. Goldman Sachs dropping even harder. You know, hey, isn't it funny? These are the guys that kind of set market rates, and sure enough, they're doing worse than the actual market. What are the odds? Home Depot. It's higher than it was at that point. Let's see what the Dow looks like though. At that point, so May 20th. Yeah, May 20th was the very rocky day. And where were we at? Home Depot. Right. So May 20th hit the low right there. We're doing still pretty good, just the same as that. I'm still kind of optimistic that it'll hit that 330 before dropping lower. It's been really hovering in this range here. Honeywell, yeah, about the same as the rest. HPQ, just blood. IBM, doing better. IBM looks like a pretty solid pick. It's been gaining strength compared to the rest, right? So, I mean, it hit a peak January 5th, and now it hit another peak on June 7th while the entire market is dropping. So, I mean, that's pretty special. You got to say that's one of the safer choices to make, short term anyway. Let's see, Intel, nope, dropping lower and lower. Intuit, higher than it was on that May 24th, 20th low, that range, so doing okay. There was a gap that formed, so we might be seeing that come back. Johnson & Johnson, nothing really happened on that day, just rejected off the EMA, right? So you can see a lot of EMA rejections as well that happened on Friday, so that's a good sign, right, if we want to continue our moves. Merck, right, it blasted through it, but I mean, not by much, right? Yeah, that's where it's sitting at right now. Okay, Microsoft, look at that, closed right on that line. And May 20th, so yeah, it's still looking okay. Not great. Netflix, surprisingly, it's still alive. Neo's looking better. I mean, compared to what the lows were, yeah, it's still doing okay. It's still how much higher as far as percentage is concerned from the 20th. 20th was here, but let's go with the 24th lows. Same sort of story. 28% higher. Pretty significant. Nike, it's okay. Nvidia, it's okay. Pinterest, it's okay. PayPal, it's okay. Pyrogenesis, okay. Roblox, not so okay. Roku got hit hard. That was rough. Still okay. But as you can see, guys, like a lot of like even Roku, good example, right? It's just kind of hovering there. It doesn't, like, it's making its lows, but it's not breaking through them. Like the lowest we've actually seen this go, but not close, is $74 a share. Right now it's at 82. There, I mean, there's definitely a possibility it's going to go lower, but I believe when NASDAQ spikes up, these are going to increase higher, and then when it drops the same amount, it's not going to be taking it as deep. Right, so great example, like I was saying, with the 24th and 20th, right? Same kind of time frame there. 24th, it hit lows, right? But now it's almost at the same range where it was on the 24th, right? As you can see, 24th was the close here, and look where we closed, almost the exact same, right? Like we're how many points off? Let's just check. 50 points. Let's say 50 points, okay? 50 points off to where it was. So between those two, right? So let's see, 24th. So the close here to there, I mean, 0.78%, right? Whereas Roku, we'll just jump on that again for a second. 4%, right? So really just depends. I mean, we're almost at the exact same level, right? So you saw 24th right here. This is slightly lower for Spotify, not great. Tesla, always like Tesla. You can see my ambitious goal right here that it could not be met right now. We'll see what happens. But at the same time, how worried am I when it just hits the right here with the wick, hits the Fibonacci EMA and Fibonacci retracement level, and it starts going up, right? Like it hit the low of 684, but it closed at 696. Okay, or should I say, where was that close? 702. No, that's broker stuff. Where did you close, Tesla? 696. Yeah, I was right. Okay, right. Same sort of idea here. Look, it kind of went below, although this closed below, and then started shooting upwards. We could be seeing the similar story. It kind of pulled back, it hit that area, and now we can be seeing the climb. Right? Entirely possible. We could also see the death of every stock on the market. Who knows, right? But this is kind of what I project, and this is what I see happening over the next few weeks. And then the last couple, Visa, nothing really exciting there. What is this? Walgreens, slowly been trickling down. Walmart has a lot of gaps to fill up here from their earning report. But yeah, consumer spending is down. Consumer spending is down overall because, hey, they can barely afford gas, right? So as that happens, it's going to really affect the rest of the economy. People are going to be very conservative with their money for the next little while. Exxon still climbing, and just oil in the Dow Jones, right? So the Dow just got smacked on Friday. As we can see, it even had a gap opening. Okay, so that'll be filled. It'll still climb. I believe we'll still hit that purple before dropping lower. So anyway, that is the chart review in a nutshell. Hope it helped. Everybody just stay positive. I know it's going to be a couple of rough months, quite possibly a rough year or two. There's always a brighter outcome. Remember, it does matter who you vote for. This is clearly, the cause and effect of that. So, thank you very much for watching, and I'll see you next time.